Welcome in class of fundamentals of economics. So in this course today we will study about the national income related concept, especially the circular flow in the economy. So we will discuss about the difference between the concept of circular flow, or you can say the flow and stock concept, followed by the various types of circular flow in the different economy. So to begin with that, we must have to understand about the stock and flow concept. What are these? So in the economy, generally these terms are in great use, common use, where stocks concept is related to the particular quantity which are existing in a point of time. So in a particular time, that is a specific time, so is called as stock, while the flow is that which is measured in the given interval of time or a period of time. So it is measured in relation to the time factor. So in a per hour, per day, per month, per year. So that is what you can say. So it is one of the analogous concept related to the rate or speed kind of thing. So stock is a concept which is uh, which is not having any dimensions, time dimension. That's why it is a point of time, because point does not have any dimension, while that flow is having dimension. So stock is a static concept, while flow is a dynamic concept. And there may be some examples that you can take care that there's the population of India at a particular date, or total number of you can say cars in a particular state, or supply of money particularly, that is the money in the circulation, or you can say the wealth, national wealth, or wealth of a person, quantity of grains stored. These are some examples of a stock concept. While flow concept you can take as a total births during the particular year 2020, you can say total, and death in a particular year. So you can say total cars that have been manufactured by a particular company in a year, in a particular year. Similarly, the total expenditure carried out by a family in a year or in a month, and total you can say quantity of grains that have been produced. Similarly, the national income also is a flow concept. So we can differentiate the flow concept and stock concept very well, and you can have this in a, you can say, the person who is having stock of different, you can say, financial assets, money, liabilities, wealth, real means of productions, capital, inventories, and human capital. So this can be taken as a stock also. So all spending, saving, debt repayment, fixed investment, inventory investment, labor utilization are some flow concept. So capital is a stock concept, while yield, a periodic income, This is outcome of that capital and is a flow concept. So they are quite correlated in the economy. When we come to the flow concept in the economy, so there is very clear that it is a circular flow, and the various models have been described for the circular flow of, you can say, commodities or money in the market. And this circular flow between the consumer and producer is the simplest one. So the circular flow of income defines the economic model, which indicates the how the money is going to move from producer to the consumer, or from a firm to the household. So firm you can take as a producer, and household you can take as a consumer. So this is the simplest way to explain, which indicates the two sector economy, means the economy where only two things are existing, household and firms. So there is a very different variation, because in a particular economy, not only the consumer and producers are related, there are many other things which are going to uh, eh, add, that is the government involvement, financial market, and these all things are going to increase the complexity, you can say, of this circular flow of income. So to make it more easy to understand, we will discuss in the step, and we will first discuss two sector, then three sector, and four sector model of economy, that is circular flow in the economy. So the first time this circular flow concept was introduced by the economist Richard Cantillon in 18th century, and then progressively developed by uh, different economists, so Krishna, Marx, Keynes, so and many other more. So it is one of the most important concept of macroeconomics. So as we are well aware about in the simplest form of the economy, there is a flow of money from household to, you can say, uh, businesses or firm, and and return back from the businesses to the household. So how this we will discuss one by one. So, but the important thing is that in all kind of this circulation, there are three different phases. One phase is generation phase, the other is the distribution, while the third phase is the deposition. So generation phase includes the phase where firms produces goods and services by involving the factors of production. So and in the second phase of distribution, this what happens, the factor income is going to be to flow from firms to the household. So this indicates that for production of goods and services, since the factor services have been involved, the factor services means that you can say the land, labor, money, as well as the entrepreneur, so enterprise, that you can say. So in return of that, the factors income are associated, that is rent, wages, interest, and profit. So these all factor incomes are now flowing from firm to the household, right? So this is what distribution phase, followed by the deposition phase, where you can say it is the phase where income received by the factors of production is going uh, to be spent over the purchase of goods and services produced by the firms. So again, the money is going back to the firms. Why? For purchasing that goods and services that has been produced by the firm. So it is a kind of circulation, you can say. So income generated in production unit is reaches back to the production unit again, and this is completing a circular flow itself. So this is what there is a uh, flow concept in the economy. Here, one more point I want to make you very clear that so for the purpose of you can say production process, the factors for the production is involved. If you can see there, how household is going to be involved in the factors of production in the firms. So the factor services are going to be provided by the household to the firm, and there is in return there is a corresponding flow of goods and services. So this dark black movement is indicating a kind of a flow which is called as the physical kind of flow or real kind of flow, right? It is the real flow, it is the physical flow. There is only exchange of goods and services between these two sectors. The factors of production are what kind of services. So this is what is going to happen. So this is you can say the real flow, right? So it is the real flow which determines the magnitude of growth process in the economy actually. So the second flow that is in this part is called as money flow, which indicates the in terms of factors of production, it is the payment for the you can say the factors of production, and at the same time for goods and services it is being the purchase of the goods and services. So this is the flow of the red color indicates the flow of money, how the money is going to flow. So this is the complete you can say money flow. In another word you can say it is the nominal flow also, it can be said as the nominal flow also. So it only involves the exchange of money, right? So so there is a complete two different cycles that are going to happen here is that of the goods and services, flow of goods and services and flow of money. So one is the real flow while other is the nominal flow or money flow, right? So this happens you can correlate this these two types of flow in all kind of economic economy, either two or three or four sector economy. So here it should be very clear. We can put the different sectors as well. So a circular flow in three sector economy is the different one. So that is what we have to discuss here. When we go for the three sectors in the economy, then as we know that two already we have discussed that that are what you can say business sector or you can say firm, and the second one is the household, right? So and the third one is what is the government sector, means the government is also going to be involved, and these are playing a very important role in the circulation of money. How and what in what context you can we can discuss. So there is one thing very clear, the direct involvement of business and household is related to the factors of production and in return the income payment. So here only we are going to include the money flow that we are going to discuss, because these all money flow are related to somewhere with the you can say flow of goods and services. So we know that there is a income of payment that is always from the firm or business to the household, while at the same time there is a flow of consumption expenditure, that is to purchase the goods and services. So this is what the two you can say sector. When third sector government involves, there is something that is also there is a relation between the government and the firm, at the same time the government and the household. They are going to add on that, they are going to complete this cycle also. So and going to get involved in the you can say the financial market, how the capital market is going to be involved in this case. So that is very important. So what happens that the government is going to put up taxes over the firm as well as over the household, over the income, right? You know that on household or in individual there is, you can say that it can be taxes in form of income tax as a direct tax. There are many other form that we have already discussed in the taxation system, while at the same time with the business also the corporate tax or some different excise duty or other things are being involved here. So the different taxation, so the tax payment is being carried out either by the individual or by the business, that is the firm. At the same time, loan payment is also, if, because we know that individual as well as the government are going to take loans from the individual as well as the firm are going to take loan from the you can say the banks, and banks are what they are being regulated by the R, you can say RBI. So obviously it is the government component related to the government. So the loans are being taken further. So this all are going to be, you can say, paid back to the government. So this in form of tax and in form of loans, it is being expended over the government. It moves over the government. So at the same time, the business or firms also involved in the purchase, government purchases. So that is also very important, that how firms are involved in this case. So uh, for the, you can say, the payment of goods and services, so these are also going to purchase, and at the same time you can say the expenditure on services is again, it is going to be returned back to the household, to the, you can say, the firm. So the money is going to be returned back from the government sector to the business in form of government purchase. That means the payment for the goods and services. At the same time to the household as a factor payments, as a transfer payment also. So these are the things which are related uh, to the movement, two different kind of movement. So we can say that even along with the movement between the business sector and household, there is a movement or exchange between the household and the government as well, in form of we can say flow of money, uh, as transfer of payment like a scholarship, old age, and you can say old age pension. And at the second thing, as a factors of payment for hiring factor services from the household. At the same time, there is a return back of or you can say the flow back of money to the government from the household in form of direct taxes like income tax, wealth tax. So these are completing one cycle here also. At the same time, the exchange between, as we have discussed, the exchange between the firms and the government. So money flows from firms in form of direct tax like corporation tax, and direct tax like sales tax. So many of these things, and money flow to the firm as well from the government. How? Obviously in terms of the purchase, in terms of the subsidies also, and in terms of payment to the firms for purchase of goods and services produced by the firms. So this is completing cycle in the two different way itself. But at the same time, a part of income earned by the government is also saved and deposited in the financial market, in the capital market, right? And government also borrows money from this financial market to meet its expenditure. So this is a kind of again investment. So at the same time, household is also going to do saving in the capital market. Similarly, the business, so all have to go for the saving in the capital market, and return back that there is investment in the business sector as well as the government sector by the capital market. So this is going to give a complete, you can say, movement in the three different sector economy, right? So what is actually, the question is, what is the role of the government sector in the economy? So it is obviously, we can summarize that government collects taxes from household and firms. Government makes transfer payment to the household and provides subsidies to the firms. Government also make the payment for purchase of goods and services from the firms, and saves and borrows money with the help of financial market. So this is a complete, you can say, movement. So, a three-sector economy model rectifies some of the drawbacks that are associated with the two-sector model. How? By adding the government, which is going to play a very important role in the economy, and it covers a major portion of the money, right? So we can say the government is going to be a major component in this financial market, and major in form of taxes, subsidies, loans, and all these things, and are essential to complete the circular movement of the money in the economy. In case the government income from the taxes and other sources is less than its expenditure, then it is generally the condition of deficit budget, and this is the most common, you can say, mechanism that exists in any economy. So, and why? Because generally expenditure is always greater than the income, because there are many, you can say, as areas where the government has to spend money, that they have to spend the money in either for the development work or even for the social welfare work, and many more things are there. So there is a conditions of deficit budget in the economy. There is one drawback of the three sector economy is that they do not consider the role of foreign market, and which is the most important in this situation of the globalization concept, that there is a direct influence of the foreign market in the economy. So it resulted in the need of the, you can say, fourth sector as foreign sector. And so we are going to discuss circular flow of income in fourth sector economy. So how these are going to be influenced by the foreign sector, that we have to discuss. So, as we know that the foreign sector receives revenues from the firms, households, and government for export of goods and services. At the same time, it makes payment for import of goods and services from the firms and the government. So, as well as makes payment for the factor services to the household. So there is involvement of foreign sector also in this process. So it is going to complete one of the important, you can say, circulation, one of the important movement of the money in the. So the major feature of this four sector economy are, by introducing the foreign sector, the scope widen further, and the money flows to the household firms when they buy goods and services from the foreign country, known as import, as well as there is a employment, which is back of money to the household, and, at the for the firms, money flow back when foreign countries purchase some goods and services, that in form of export. So if the value of import is equal to the export, this is a balanced trade, and the value of import is equal to the value of export, it is called as a balanced trade. While if imports are greater than the export, it results in trade deficit, and in case of reverse situation there is a conditions of trade surplus. So this is what the four sector economy completes the a kind of you can say the open economy where government, household, firms and foreign market all are involved in the circulation of money. This is the link over which you can go through that and you can prepare well. So thank you very much.